only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media, this is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Before we get into our intriguing content today, please join me in welcoming our featured guest. Hey, there is no featured guest today. I guess I got the wrong notes here this morning, but within every market there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message. I do deliver it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990 or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls. I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan, a plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. We are celebrating today, as we do every day, National Missouri Day. Yeah, I don't know about that one. National Trivia Day. I don't know about that one. Nah, we'll go with the food version once again. National Spaghetti Day. Yes, it is. So we'll stick with National Spaghetti Day today. So that's just a little bit of fun for the start the morning off. Looking at the markets this morning. Holy cow. The Dow Jones Industrial Average up 145 points, over 25,000 right now. We're at 25,068. Oil up 33 cents per barrel. The 10-year Treasury yielding is up about 2 basis points, which is pretty ironic that we're seeing the yields holding steady on the 10-year while we're seeing the stock market skyrocket this way. So that is a bit of a unique number. The 30-year fixed rate loan, the bond. Remember, bond prices, the yield, the interest rate goes in the opposite direction of the bond itself. So the bond right now is down 12 basis points. It's about 1/8%. Then we're looking at the interest rates going up. But we got the 30-year fixed rate loan notices from Freddie Mac this morning. 3.95 is the 30-year fixed rate loan from Freddie Mac. Last year, this time, 4.20. So we're nicely moving downward. Yeah, a little bit better pricing this year if you were looking at getting a property restructured. So that's good news for us. Last week we were at 3.99, so it's come down a little bit, even though we're seeing great information coming out of the markets. So that's a big, big benefit right there, that if you're still thinking about buying a house, selling a house to move up, maybe you're looking to right size, all of those are possible right now with the beautiful things we're seeing in the markets. Why are the markets skyrocketing again? Well, the ADP employment report came out this morning. It's usually on a Wednesday, but because of the holiday, they delayed it one day. The report showed 250,000 jobs created in the month of December, much stronger than the 185,000 jobs that were expected. The November read of 190,000 was slightly lower, revised slightly lower to 185,000. The job gains were all on the service side, which added 225,000 jobs, the most in 18 months. The bright spots were education and health, both adding 50,000. Jobs and professional and business added 72,000. Goods producing sector added 28,000. Construction added 16,000. Manufacturing added 9,000. All extremely good numbers. prompted Mark Zandi, the chief economist of Moody's Analytics, to tell us the job market ended the year strongly. Robust Christmas sales prompted retailers and delivery services to add to their payrolls. The tight labor market will get even tighter, raising the specter that it will overheat. Initial jobless claims, which measures individuals filing for unemployment benefits, for the first time rose 3,000, not a whole lot, to 250,000 for the last week. 2,000 is a good, decent number of claims. Remember, we want that to be the lower the better. The jobs number that we reported earlier, when we look at the jobs report, the ADP employment report, we want that to be as high as possible. Initial jobless claims we want to be as low as possible. And this was the highest figure since mid-October of 2017. Last month's numbers, now we're going to get the BLS jobs report comes out tomorrow. Last month's numbers, 228,000 jobs created, 4.1% unemployment rate. The market is expecting 190,000 jobs to be created and a 4.1% unemployment. And we may see some benefits there based on looking at the ADP. The ADP and the BLS reports are not always the exact same, but they trend the same way. They track each other pretty closely. So it would not surprise me to see an unemployment rate drop to 4%, might even be in the high threes. And this will have a lot of impact on the bond market. So let's continue watching that. Probably see the bonds. It wouldn't surprise me to see those bonds drop again. Again, remember, people are pulling money out and they're all excited about the stock market. And that is something that should be worrisome. Now, not that we don't want the stock market to go up, but when the water cooler discussion is about stocks and bonds, and we're hearing that all over. No matter where I go right now, I hear people talking about the stock market and Bitcoin. Those are the two items that you hear people talking about all the time. Whenever we hear that as what we call water cooler talk, that's a good sign to be very, very careful. Be very careful. Because the smart money ends up, and when we talk about smart money, we talk about the individuals who make a living running money, what we call running money, meaning the big hedge funds and the big broker dealers and the full-time investor. See, you and I, they don't call us smart money, even though we could be smart in a specific industry or a specific company. We're not referred to as the smart money, and the reason we're not is we're doing it spare time and part-time. If you're doing it 12, 14, 16 hours a day and you only focus on, 5, 6 companies, and again, you're doing that for 12 hours a day or 16 hours a day, you get to know a lot about the company. You get to know a lot about the industry. You might even take a road trip. See, it's easy when you hear about stocks like Apple, right? Because everybody knows what Apple's doing. They don't breathe without some sort of a notification. The issue becomes the off-the-beat stock. When it takes an analyst to walk into the store, walk into the factory, walk into the corporate headquarters, and do some research and see what is happening there. What are the people saying? What are the accountants saying inside the company? Are they watching and seeing what the trucks look like? Are the trucks moving or not moving? Those are the issues that we can tell of what smart money is doing. It's not a individual statement. It's just they study it all the time. Now, we try and get into the stock market, and it fascinates me, the people that are the day traders, because that's just gambling. When you're a smart trader, you're buying the company. That's what Warren Buffett does. He does all kinds of homework on the company, and they're buying stock because they want to own a percentage of the company. It's not because they're looking to trade the momentum. Big difference there when you're looking at trading momentum versus trading the company. Trading momentum is what the day traders are doing on a regular basis. They're out there just playing around with the momentum. So if I can get a half a point and I buy 1,000 shares, I just made $500 for that couple of minutes worth of gambling. And what they end up doing is their goal there is to see, can I make $1,000 a day? Think about that. If you can make $1,000 a day, that's $250,000 a year. When you think about just the trading days per year, it's a lot of money. So they're playing momentum. Those are the day traders. Again, I go back and talk about the smart money. When the water cooler talk is about stocks, bonds, Bitcoin, things like that, well, how much Apple do you own? How much Amazon do you own? Did you see what Amazon did yesterday? Well, when the retail investor goes out and is talking like that, that's when the smart money starts pulling out. When smart money pulls out, what do? They need some place to put their money. Well, where are they going to put their money? Generally, the counter location for the stock market is the bond market. So the more they put money into the bond market, that creates demand for bonds. The bond pricing goes up, which we've spoken about this before. That means the yield, the interest rate, goes down. So as we get those interest rates to continue dropping, we end up seeing the benefits for the rest of the markets. Now, the other part that we look at, we say, okay, the other parts of the world, where are they going to put their money? When you look at the U.S. 10-year Treasury at 2.46 as I'm speaking to you right now, and compare that to the German 10-year bond at 0.435, don't you think the people in Germany want to sell their bond and put it into U.S. 10-year Treasuries? Just as safe either way. I'm not going to get into which one is safer, because when you compare U.S. and Germany, they're both very, very safe. But wouldn't you want to get, if you're looking for long-term yield, wouldn't you want to get over 2% more? The spread on those two is generally about a half a point to a point. So it's double what the norm is. So when you start seeing those things, that's when you start saying, okay, people in Germany are going to buy more U.S. bonds. When they buy more, that creates more demand. Look at Italy. They're at 2%. That's because it's not a real safe place to have your money. Spain, 1.53. UK, 1.23. Japan, their economy has been so weak over the last 20, 30 years, they're paying 0.057%. So if you're looking at 0.057 on the Japanese 10-year, you start saying, okay, if you're a Japanese investor and you want to take some money out of the markets, out of the equity markets, would you rather get a 0.05%, or would you rather put it in the U.S. and get 2.46? Again, creates more demand for our bonds. I'll talk more about that when we come back. You are listening. Hey, good to see you on here, James, Maurice, Lisa, Coach Bruce, Azita, Brian, glad to see all of you with us this morning. Get a few shout-outs in there. LaDonna, Mitchell, Richard, Paula, glad to see all of you with us. If you have any questions, comments, feel free to put them in the chat windows right there, and we'll see if we can get to those questions and see if we can help out there. Trang, good to see you there as well. When we come back, we're going to talk about time on the market for real estate. It is dropping. Why is that? What are we going to do about it? What should we do about it? Should we do anything about it other than maybe we want to know about it? Obviously, that always helps us. So the knowledge is always a good thing right there. Cities to consider when renting and buying. We might even talk a little bit about the cost of waiting to buy a home. So we can think about that one as well. Some home buying tips for the current market. We're going to get into that. And we might, if we have time today, I don't know if we'll even get to it, but I've got this Widow's Guide to Social Security Benefits. So we might see if we can get to that one as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. And if you're contemplating buying a new house, the very first thing you want to do is get a hold of the Ultimate Home Finance Toolkit. It is free. The Ultimate Home Finance Toolkit. And all you have to do to get that is text RF Toolkit. That is request for RF Toolkit, no spaces, to 79564. RF Toolkit to 79564. Get your free copy. I'll give you a mortgage calculator in there. Actually, I'll give you several mortgage calculators, an affordability worksheet, and some information, further information on home finance. Most important part, think about this. If you look at the price of your home, you can actually pay more money for your home and have a lower payment than if you get just saving a little bit on the interest rates. So how do you do that? Ultimate Home Finance Toolkit. It's free. Text RF Toolkit to 79564 and get that toolkit totally free. So the time on the market is dropping to a new low, or it did drop to a new low in 2017. According to recently released data from the National Association of Realtors, the median amount of time a home spent on the market hit an all-time low of only 3 weeks in 2017. 3 weeks on the market, 2017. Strong buyer demand, a good economy, and a low inventory of new and existing homes for sale created the perfect storm to accelerate the time between listing and signing a contract. The time needed to sell a home has dropped substantially since its highest mark of 11 weeks in 2012. I posted a chart earlier today showing this information. If you're a homeowner debating whether or not to list your home for sale, know that national market conditions are primed for a quick turnaround. Let's chat about this. Get that toolkit and get in touch with a real estate professional. There are professionals that I can introduce you to that'll help you make these informed decisions. You want to have a great team. On your team, you need to have the financial side of it. That's why we're giving away the ultimate financial toolkit. But you also want to have a great real estate professional helping you. There's a lot to it. I mean, you'd think, or some people will think, that if they go out and they just put their house on the market, especially when you're talking about a median time of 3 weeks, that you just put a sign out in the front yard. You can go to the 99-cent store and buy a for sale sign, and you can just do it all on your own. So let's think about what some of the reasons, some of the things that maybe you haven't thought of. Number one is paperwork. There are a lot of disclosures, a lot of paperwork necessary. There is tons and tons of regulation, and the regulations are changing on a regular basis. The real estate professionals, the title companies, the escrow companies, they're all coming out with data to share with the industry as to what's going on. Did you know that as of the 1st of January 2018, the cost of recording documents in the state of California increased dramatically? Well, if you don't know that, then maybe you need a professional working with you to help you. Maybe you want to understand what those costs are and who's going to pay them, who's going to negotiate them. When you're, again, California, we know that California loves regulation. There is a disclosure for everything in the California Association of Realtors package because of the state requirements. Are you going to try and just get around the law? Are you going to take that big of a risk? Say you're selling a $500,000 house. And I know that the numbers are different in your neighborhood. In Orange County, they're closer to $770,000. In San Bernardino, they might be a little lower. Doesn't matter. Let's just use $500,000. You go and you try and sell that property on your own. Think about it. If you didn't give the buyer all the right disclosures, they can sue you, and you have no leg to stand on, and you have no backup. If you've got a real estate professional working for you, well, they can still sue you. You can sue anybody for anything, anytime. But the likelihood is that the documentation has been done in accordance with California, state, and the federal government's laws. The real estate professionals, they should be experienced people, educated and experienced with the entire sales process. Again, that's why I sit here every day and talk to you. And I chat with real estate professionals when I'm not on air. I talk to CPAs and attorneys and title companies. That way we're always out there chatting with individuals to see how we can help, how we can get them more knowledge. The real estate professional is going to act as a buffer in negotiations with all the parties of the real estate transaction. Notice I didn't say between buyer and seller. It's with all the parties, because you're going to also be dealing with title companies, escrow companies. What happens if there's a cloud on title? Maybe it's legit, maybe it's not legit. I've seen some of both just recently, where I saw one just recently. I saw a title report from a listener that they bought their house the 1st of June, I believe it was. But in the interim, like 2 days before they recorded, there was a lien placed on the property, and it was not discovered during the lending process. Who's responsible? Well, you got to figure that out. You got to know that. Experienced real estate professionals understand those areas. That's part of the negotiations, right? They're going to be talking. They're going to have a relationship with a great real estate professional. I see, in fact, or a title professional. I see that Kathleen Buys is on with us this morning. Great amount of experience helping people with their title insurance. Done it for a long time. Knows what she's doing. Pricing. The real estate professionals understand today's real estate values when setting the price of a listing or an offer to purchase. I looked at a listing just recently. It was an 1,800 square foot home, and it was a little bit over $1,200,000, not on the water, not in a beach city. I said, boy, that seems like a lot of money, over $1,250,000. Well, I know who the real estate professional is, and if she says it's worth $1,250,000, I'm going to go with her. She understands her market. She knows the neighborhood. She's there all the time. Experience again. Understanding current market conditions. The professional simply and effectively explains today's real estate headlines and deciphers what they mean to you. So as we go into the new year, one thing is for certain. If you plan to buy or sell a house this year, use a real estate professional. Protect your backside. Many, many benefits. And I just talked about the non-financial benefits. There's also benefits or statistics that I could share with you. I might at some point, maybe when we come back, that will show you that you're going to get more money using a professional if you're selling a house than doing it as a for sale by owner. You get more money that way than for sale by owner. Think about that concept. So make sure you're going out there, make sure you're getting the tools that you need to make the informed decision, and talk to real estate. Use professionals. They don't if you're using a really, really good professional, in most instances, not all, but in most instances, a good professional does not cost you anything. Yes, you have to pay them, but the headaches that you save, the increased value that you get, the protection of your assets, those are all very, very valuable, and they offset whatever the out-of-pocket expense might be. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, cities to consider when renting and buying, home buying tips for the current market. Got it all for you today. Beautiful first week of 2018. Remember, you can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us. Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel lending team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel lending team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message. And as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. In the Your Credit Matters segment today, being brought to you by CreditSanitizer.com. You have a credit report. It is wrong. They all are. What are you doing about it? Credit Sanitizer has the solutions for you. Credit Sanitizer. Go on there. Go on the website there. Just register on the website, and you're going to get an email every week with some different tips for you on how to increase your credit score, clean up your credit report. And if you need some personal guidance, just let me know. 800-306-1990, 800-306-1990. We will help you with that as well. Cities to consider when buying and renting a home. That is the subject of today's Your Credit Matters segment. January, the natural time to take stock of your financial life and to dream big dreams about 2018. Could this be the year you make the leap to home ownership, or will you make a big change and trade in your mortgage payment for a landlord? There's a lot of folks out there chatting right now about, something with the new tax laws. It's not as beneficial to own a house. Well, I think you need to look at that a little closer, because are taxes the only reason you buy a house? Do you buy a house strictly for a tax benefit? Or is it maybe for your family benefit, maybe for your security, for your health, maybe for an investment, a financial investment? Those are all issues right there. In the complex calculus that's required for the renting versus buying decision, one variable stands out. Which is cheaper? If that seems like a hard question to answer, there's a good reason. Crunch the data from America's largest cities, and you'll learn it's perfectly split, according to the Urban Institute analysis. Now, I'm going to share with you some numbers and give you some hard data. A lot of people don't want to give you hard data. They want to give you opinion. And, opinions are always out there. But I was just looking at a couple of properties, and these were in Corona, California. I saw one that went on the MLS just recently for $430,000. And I looked at it and I thought, well, something, what is the benefits? What is it going to cost? And I saw another property at a very similar time go on the MLS for $2,600 a month in rent. So I looked at it and I said, okay, what are the numbers going to be like in that particular issue? So with a minimal down payment, with a very, very minimal down payment, in fact, in many instances, the down payment could be less than the move-in price. Think about that. Less than the price to move into a piece of a rental property. So let's look at that $430,000 property. Should we go into the down payment assistance program and talk about that one, where you get a 5% back down payment assistance, or up to 5% back in down payment assistance? No, let's not do that. Let's just talk about that $430,000 purchase price, and let's talk about putting $12,000 down. Maybe let's do a $405,000 loan. I'm doing this on the fly. Never a good thing to do things when you're live broadcasting, but we're going to do it anyway. So we look at the $430,000 purchase. We're comparing that to a $2,600 rent, and we're looking at the annual percentage increase for Riverside County is about 5.9% is the rental increase in the area. 5.9%. Okay, so we're looking at all these different numbers. We're crunching the numbers as we speak, right here, live on radio for you. So buying, your payment is going to be, in the first year when you're buying, $2,761 roughly. Principal, interest, taxes, insurance. That's using a 4.25% interest rate. And again, I'm just trying to do some rough numbers for you. I probably should do the 3.95% Freddie Mac number, but I'm just going to leave it at 4. Well, let's do the 3.95. That way, we're just using Freddie Mac's number for educational purposes only. That way, we can avoid all the APRs and all that, the fancy stuff that we need. Well, I'll give you 3.97 as the APR. So here's the issue. So we're looking at $2,691 versus $2,620 on the rent. Remember I said it was $2,600 a month? Then we're going to add another $20 a month for insurance, for renter's insurance. But you have to remember that over the life of your loan, and I'm going to only use 9 years, right? 9 years is an easy number. Why do I use 9 years? That's because that's roughly the amount of time we're keeping our homes nowadays. So I just put in there a 9-year analysis for this particular project. Okay, so over the time of those 9 years, you're going to be $68,621 better off just out of pocket money. Because you're going to start off at $70 a month, where you're paying more for buying than you are for renting. But that's going to switch over the 9 years to a point where you're paying $4,100 in rent versus the same $2,700 as on that 30-year fixed rate loan. Now, appreciation. We're going to look at the forecasted appreciation rate, 3.05%. That is very, very conservative. In fact, we probably should be using a higher number than that. But I'm going to use that number anyway. We'll just leave it right there for the time being. But you're going to be looking at $133,000 through appreciation. You're going to be paying down your bill, your original note over those 9 years by $76,000. It's actually $76,206. And you're going to be looking at potentially a tax benefit, but a minimal. So what is the total overall gain? You're actually looking at, by buying a home, $430,000, $238,733 in net worth benefit by buying versus selling. $238,733 is the benefit of buying versus selling. Think about those numbers. Those are some pretty serious numbers for you to contemplate. And you know something, I don't like the idea of using such a low forecast. So let me go to the forecast number of what we're really looking, well, I guess 3.05 is the forecasted appreciation for Riverside County. Think about some of those numbers, right? Now, if you look at I just changed it to a married couple. See, the numbers, they're staggering. $237,555. Think about some of these numbers, folks. If you think about what the benefit is, these are financial, and that was putting in a zero benefit for taxes. Zero. $133,540 is the gain through appreciation. $76,000 is the equity or the paying down of your principal. You are significantly better off through all that time. Now, let's contemplate where the other ideas here, the other issues of buying versus selling. What are you hearing in the marketplace? Well, this is a big, big decision for you, whether you're going to buy or sell or buy or rent. You get a lot of benefits when you're looking at buying. We've talked about the health benefit. It's a sense of security. You want to have a dog in your own house? Get a dog. You want a cat? You want 5 cats. There's no limits. That's not there might be some city ordinances that you have to pay attention to. But for the most part, you have the flexibility when you're looking at buying versus renting in that instance. You can change the interior colors. You want to change an interior wall. You want to remodel the kitchen. You can do all those things in your own home. Maybe you don't like that avocado green carpet. Some people like it. Some people don't. But you can make those changes when it's your property. If it's a rental, well, you can't do that on a rental property. Now, when is it best to rent? Well, not a whole lot of times, but if you know that you're going to be moving in a very, very short time window, then it might be better for you to rent. But I just showed you $2,700 or $2,600, I don't have it in front of me again, as a rental versus a $430,000 purchase. And think, a $2,600 rental, you're going to probably need somewhere around $6,000 but first month's rent, maybe you need last month's pet deposit and security deposit. So you're going to need somewhere between $6,000 and $10,000 in that. If you're buying a $430,000 house, if you go with the down payment assistance programs, you may only need a couple of $1,000s to get into that property. You might even be able to get a seller credit or a lender credit to help you out with that. So think about all those different issues when you're making that buying versus renting decision. And you are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, home buying tips for the current market. So we've talked about renting versus buying. Maybe we should get into some tips as well. We'll talk about that. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us. Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRENMLS 217037 and 145502 and Cal BRE 0186945 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by Gold Star Mortgage. When you're ready for that next mortgage, Gold Star has the programs and the products for you. Gold Star, they're the only ones that I know of that has the Fast Pass loan approval. Fast Pass. Hey, save $10,000 to $50,000 when buying a home with a Fast Pass approval. Think about this concept. And I've talked to several real estate professionals about this, and without a doubt, every one of them has concurred that there is some significant benefits to your real estate professional when they can walk into an offer, when they can submit an offer, and there are no loan contingencies on the offer. When the real estate professional is able to check box J4 on the California Residential Purchase Agreement saying no loan contingencies. Now, what is the difference there? Why is that a big benefit? Well, in this day and age, when we're talking about the idea of very, very serious and significant competition on real estate, whenever there is a purchase, or when the property is priced properly, easy for me to say, when the property is priced properly, the real estate sells very, very quickly. And I shared with you earlier that last year's median number, according to the National Association of Realtors, the median amount of time a home spent on the market, all-time low of only 3 weeks. Now, if that's the case, and the National Association of Realtors has published that information, I'm sure they can cite all of their studies for it. But with that being the case, that means there's heavy, heavy competition when property is priced properly. In that situation, you need to stand out above the rest of the market. How do you stand out? Well, cash buyers stand out. But cash buyers tend to get out of the market as prices go up. They want the deep discount. Cash buyers are generally looking for distressed property. Well, you as a consumer, as the one that's going to be looking to live in the property, maybe not using it strictly as an investment or as a flip, well, you can afford to pay more than a cash buying investor. But you don't have to, because you're a cash buying consumer who's still using a loan, but you have no loan contingency, just like the cash buyer. So that's a big, big benefit for you. That's why the Fast Pass is so important and so beneficial to people. Home buying tips for the current market. In September 2017, sales of new homes in the United States shot up to the highest level in nearly a decade. Now, that might be great news for those monitoring the robustness of the country's housing market. It's not ideal news for buyers of modest means. These statistics means that Americans unable to find existing homes are increasingly turning to new construction. But at the same time, home builders are overwhelmingly focused on creating higher priced housing, which often shuts out buyers at the lower end of the market. For home hunters who may not have a limitless budget, most of us, the already challenging home buying process may be getting harder. That doesn't mean you should give up on owning a home, but it does mean you need to bring your A game, be aggressive, and think creatively. Check out some of these tips I'm going to give you. Maybe it'll make you a home buying master. Don't expect or waste time looking for hidden gems. If you find the property you like, act on it right away. Again, I told you 3 weeks out median time on the market. Have realistic expectations. If you expect to find a bargain, you may end up being frustrated. Another issue there is be patient. When there's a lot of people out there, high demand for property with low supply, well, you might get turned down. Again, that's why you need to have that real estate professional working with you, because you may get turned down several times. Don't get frustrated. Expect that. Great real estate professional will tell you, hey, you know something, it might not be till the 5th or 6th offer that we get accepted. That's realistic expectations. They're helping you with that. Make the first offer when affordable houses are few and far between and snatched up quickly. It's important to stay on top of new listings and be ready. So once you've got that ultimate home finance toolkit that we're giving away for free, again, text RF, like Frank, toolkit, RF toolkit to 79564. No spaces in there. When you text that out to 79564, you're going to know exactly what you can afford before you go shopping. Then you talk to our friends over at Gold Star. They get you that Fast Pass loan approval. You're ready to make an offer the minute you see a property you like. Now, if you got a real estate professional who's on top of their game and they've got some of the tools of the trade, you may go and see a property at 123 Main Street. You may like that property. You may ask that real estate professional, hey, can we make an offer right now? You might actually sit down at the kitchen table in that property and make an offer before you ever leave. If you like it, act upon it real quick. There's no time to wait. You might want to consider a multifamily home. That the market is not moving as hot on multifamily because people don't understand them. So maybe you want to get a 2, 3, 4-plex where you're going to live in one of them and you can rent out the other units to help offset the payments of them. Again, FHA has programs for all the way up to 4 units, and they've got some great financing. And don't forget, we did talk about the down payment assistance programs where you can get up to 5% down payment assistance. Good deal right there. Buy during off-peak seasons. You got to hurry quick on this one because we're almost into the peak buying season. As soon as we get rid of what we call in California winter, you got to laugh whenever you say winter in California when we see what's going on the East Coast and the rest of the country where they're talking about this bomb cyclone or whatever they're calling it. Not good news. Well, out here in California, I'm looking outside the window right now, nice blue skies, helicopter flying overhead. Maybe have some rain later at the beginning of next week. Yeah, but they still call it the holiday season. Buy as soon as you can. Get out there and search. Look at the off-the-beaten path properties. Consider properties in what are non-brand name towns. Maybe you don't need to be in Irvine. Maybe Corona will do for you. Maybe Costa Mesa instead of Newport Beach, or Fountain Valley instead of Huntington Beach. Be aggressive. Again, you're not going to be able to steal properties in this kind of environment. When I shared with you some numbers that were down about 21% year over year on homes available for sale on the MLS right now. So watch out for all of these different issues. And again, I'm going to share with you, I try to bring this home every broadcast. Give me a call at 800-306-1990. I'll put you in touch with a real estate professional in your neighborhood. They're the ones that have the hidden gems. That's the big issue right there. Always looking for the hidden gems. I can get you the addresses of every property on the market. All you have to do is go text NEST, N-E-S-T, to 79564. Text NEST, N-E-S-T, to 79564. And you can get a text message every time a new property comes on the market. But that means that everybody else is able to see that at the same time. What you want is a real estate professional who has the inside scoop. They know what's going on before it hits the MLS. Maybe they know of a family that's just getting their house ready to go on the market. Maybe they're doing some painting right now. Maybe they're in the middle of an estate sale right now. Maybe they've got all these different issues going on, and you need to understand where those are coming from. Great real estate professionals have a handle on the market. They call it their farm. They know what's going on in the neighborhoods that they're working in. That's the beauty of talking to that real estate professional right there. So that is the bottom line. That's the Mortgage Minute. That's from our friends over there at Gold Star Mortgage. And be sure to set your first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money, help a lot of people, have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.